Hi, everybody. This is Lynette from Outright, and I also have here with me Laura Urabari and Priyanka Sharma, also from Outright. Laura and Priyanka are going to be the ones that are delivering the presentation. Laura?
Great. Thank you, Lynette. So one of the things that we wanted to do today was our webinar about 10 financial tips for a Blockbuster year end. At Outright, we get lots of questions, and we talk to many small businesses and many of our customers, folks like you, about year end is coming and what are the things that I need to do and what are the things that I need to make sure I've checked off my list. What can I do now that I'll be glad I did, come tax time? And so what we've done is put together a list of the 10 sort of most common questions and tips, if you will, that we get and often talk about with small business owners. So tip number one is take a photo of your home office. And we're actually going to do a quick poll on home offices before we dig into specifically the tip.
Okay, so we have a poll up right now. You should see it in front of you with just a yes/no answers. So if you could quickly just answer that so we can get a sense of who the audience is and what your work environment is like, that would be great. Okay, the votes are rolling in. All right, so what we have here is, for the question, do you have a home office? 94% of you said yes, and 6% said no. Okay, great. Let me hand it back to Laura.
So for the 94% of you that have a home office, when you do your taxes, take a photo of your home office, because oftentimes once you have a photo, you sort of have context that you can bring to your accountant when you talk to them about how you go about taking the home office deduction. Sort of the photo is kind of the proof and the details of what your home office looks like. And the big thing about taking a home office deduction, the big things to remember is that the home office deduction your space must be used exclusively and regularly. And there's information on the IRS website that is actually pretty easy to understand after we've looked through it numerous times, and it's actually pretty easy. So I do recommend that you read that to get an understanding of the home office deduction. But exclusively basically means that if you have an extra bedroom that you use as your home office, if you have a bed in there and also your desk and other things in there, you can't deduct the whole square footage in that whole room as a home office deduction. What you would need to do is deduct the portion, the square footage of space that you have, that is where your desk and your chair and that portion is. So you can't deduct the whole room, but you would deduct the portion that you actually use for your desk space and your chair and that kind of stuff. So the IRS publication for it is 587, and if you just search on the IRS website for 587, you'll see information about that. And this is a great discussion to have with your accountant about taking the home office deduction. But the other thing to mention about the home office deduction is, years ago, it used to be considered a red flag if somebody had a home office deduction, and that was during a time period when most people didn't work out of their home and most people went to an office every day. But that's changed dramatically over the last 10 or 15 years, and so now a home office deduction is not necessarily a red flag for people, a red flag to be audited. I think the key is just make sure that you that you follow the instructions. Tip number 2 is take note of your inventory. So at the end of the year, you want to make sure that you have an accurate picture of what your current inventory looks like on December 31st. This doesn't have to be something that's overly complicated. You can do it you can do a simple count and take a picture of it. So then again, you have a record of what your inventory looks like. And the key here is, if you don't do it at the end of the year, to try and do it later is quite painful, and you can't remember what you had 2 weeks ago, and so we really recommend that you do it at the end of the year. Make sure you have that count. Now, for FBA sellers, this is actually not something that's that difficult to do, because in your reports tab in your seller's account, there is a report that's called Manage FBA Inventory, and you can run that report and you'll be able to see everything that you've got stored in the Amazon warehouses. So if you're an FBA seller, run that report and you will then have your inventory at the end of the year done pretty quickly. The second thing about inventory and year end is if you have inventory that you haven't moved or you've put on sale and you haven't been able to sell it, we suggest that you try to move that inventory by perhaps donating it to charity. That will get the inventory out of your space, but it will also give you a tax deduction that you can take for the year if you donate that that old inventory. And the only note on that is make sure that your deduction is the value of your inventory is not more than $500, because there becomes more strict reporting requirements when you get over $500 in charitable donations. And again, if it is over $500, just make sure that you are following all of the rules and requirements, and your accountant or tax professional can help you with that. But the idea here is take note of what you have, and then if you've got old stuff, donate it so that you can start the year and not carry over old inventory. Okay. Tip number 3. There's not many times in the world where people will tell you to spend more, but this is a case where before the end of the year, it is a good idea to spend more, and here's why. There is a specific Internal Revenue Code from the U.S. Internal Revenue Code Section 179, and it's basically an exception to the typical tax laws. And the purpose of 179, it allows you to write off the full expense of capital equipment. And capital equipment is things that you will use all the time, like office furniture or equipment or software that you will use to run your business. And normally with those kind of expenses, you would have to deduct them over several years. But this Section 179 actually allows you to take the full deduction this year. And you can deduct actually up to $139,000. And next year, that amount actually goes down to only $25,000. So if you need to buy a new desk, a new chair, if you're looking to buy some software, any equipment, any capital type expenses, it's a good idea to actually purchase them now, because you can write off the full amount of them. And that will end at the end of 2012. So anything like printers, computers, sewing machines, any of those kinds of things would fall into this bucket. So definitely spend more, and you can probably get some pretty good deals on things now as people are trying to clear out. There's lots of year-end sales happening. Okay. Tip number 4, prepare your books. So this is actually a really important tip for folks. Taxes are coming up in a few months. We know that it's a painful time, but we can't stress enough how much easier your tax time will actually be if you keep track and stay organized of all of your sales and expenses throughout the year. You want to look for ways to automate things. That's the key thing when you find a system that you want to use to keep track of your sales and expenses. The idea is you find a system, whatever system is right for you, so that it's automated. And the reason you want it to be automated is because, 1, there's less room for error when it's automated, but 2, it saves you from having to pile up all of your receipts and all of your paperwork and then spend a bunch of time entering it in. If you find something that's automated, it is automatically imported, then you can go through and you can check it, but you actually don't have to spend all the time entering it in. So really, really important to keep track of things. It will save you time and lots of headache down the road, and you'll know how your business is doing. Okay, we have one more poll question that we want to run here, so let's.
Okay, you should see a poll in front of you. We're curious about how the attendees are keeping track of your business's finances. And there's a couple options for you to choose from. Okay, some votes are coming in, so let me wait a few seconds so everyone has a chance to vote. All right, it looks like most of you have voted. So I'm going to close the poll and share the results. So for this question, it looks like the most popular answer for how do you keep track of your business's finances are 67% outright or other software, 14% spreadsheet, 10% other, 5% paper and pen along with a shoebox of receipts, and 5%, yikes, I don't keep track of them at all. Okay, so very interesting. Thank you for answering that.
So for those folks, for the 14% that are using spreadsheets and folks that aren't keeping track, a really good point here is the beginning of the year is coming, so start in January, find a system that works for you, keep track of things, and it'll really be more helpful if you have something starting fresh from the beginning of the year, and that way you'll have a whole year with everything automated.
Okay, I do have a question here from Rod. Can you give some recommendations of automation that would be helpful to everybody on the call?
Yeah, so usually when I say automation, what I mean is use a system. Obviously here I'll use Outright as an example, but something that actually, a system that will pull in all of your transactions. So for example, with Outright, when you link your Amazon account and you link your bank account to Outright, what Outright does is it goes and it pulls in all of your sales and expense transactions so that then you don't have to enter them into a spreadsheet. They're organized by category in Outright, and then you can run reports on those. It can track your sales tax. It makes everything a lot easier if you've got an automated system that allows you to pull everything into one place. Okay. Let's keep going with tip number 5. Tip number 5 is around getting a tax ID. And I actually think probably for most of you, if you're FBA sellers and selling on Amazon, you all probably, most of you probably have a tax ID because Amazon does require tax identification numbers for all of the professional sellers. So for anyone out there that doesn't have a tax ID, or people will often ask us, why should I get a tax ID? A tax ID is really important because the IRS is now requiring more and more documentation for e-commerce businesses. And if you use your social security number is then sort of floating out there on these different forms and different documents. And that's really, really not a good idea with all the fraud that's going on these days. You don't want your social security number floating out there with your forms and your paperwork. So highly recommend that you get a tax ID for your business. And also for 1099-K purposes, the tax identification number is also something that is required for the 1099-K, and like Amazon requests that you actually have one, and you don't want that your social security number. They won't put it on the 1099-K form. Oh, right. Yeah, the other thing is if you don't submit your tax identification number, some merchants will actually withhold a portion of your payments from you if you don't submit your tax identification number, because then they don't have anything to match back to the IRS. So it's a bit of a stick that they use in order to get you to submit your tax identification number to them. So it's definitely a good idea for you to have one as as you move forward in your business, and it's just safer and it's becoming more and more required. So we certainly recommend that you get a tax identification number. Okay. And tip number 6, this is about mileage and tracking your mileage. So we talked to many of our customers, actually this was last year around this time, and one of the things that we found is most folks are not taking the mileage deduction. And the mileage deduction is something that you can get 55.5 cents per mile. You can take that deduction for any business driving that you do. And depending on how much you drive, that can certainly add up throughout the year. The reason most people don't take the deduction is because it's kind of a pain and it's hard to keep track of. It can be tedious, but there's a lot of new apps out there. Some of the mobile tracking apps that use GPS will now allow you, they kind of do all the tracking for you. So when you get in your car, you'll say where you're going, and they calculate everything for you because it's based on GPS. The other thing about mileage deduction is people will often ask, do they take a standard mileage deduction like 55.5 cents a mile, or can I deduct the maintenance and the gas and the oil changes and tires and all of that stuff for my car? The vast majority of people take the mileage deduction because it's more appropriate and it's easier. It's definitely something that you should talk with your tax professional or your accountant with. The main thing to know is you cannot take both. So if you're deducting maintenance and oil and gas and all of that stuff, you then cannot, on top of that, deduct mileage as an additional expense. And from an IRS perspective, the main thing that they want to know is that you're actually tracking this through a mileage log. And so the things that are important to put in your mileage log to make sure it's accurate is you want to include the date, time, name and the address of the destination that you were going to, and the purpose of the trip. So you might say, 12/19. I don't think the time has to be exact, but if you're tracking it, it might as well be. And you'd say you're going to the post office located at 123 Main Street, and the purpose of the trip is, shipping your packages. And that could become, once you have that entry in there, it can become an entry that you use over and over, so it does become less tedious. It's just a matter of sort of the start and stopping of it.
And then I have a question here. Did you specifically say how you could record mileage and outright?
Oh, you can record mileage and outright. So there is an iPhone app for Outright, and you can add your mileage directly in Outright if you just click on mileage when you're in the app, and it will let you enter it won't let you enter the destination, but it will let you enter the number of miles that you drove, and then that would automatically be tracked in Outright. And then when you ran your business reports, that would show up under mileage. And so again, it would be automatically calculated in for you. You don't have to enter it in a separate transaction, if you will. It's automatically calculated into all of your sales and expense data.
And then one other related question is, are there any other mileage apps that you can recommend if they're not able to get the Outright iPhone app for whatever reason?
Yeah, there's another app. It's called MileBug, and we've heard a lot of people using MileBug. That is an app that you can use, and Mile Tracker is another one that you can use. There's lots of apps out there, so it might take a bit to try the one that works for you and find one that you like, but it's definitely worth the time doing it. So MileBug, Mile Tracker, you can track directly in Outright as well.
And then one more question that came in related to mileage is round trip mileage what she should record?
Yes. Yes.
Okay. Oh, okay. And then a related question from Anne is, she doesn't have anything to have an app on. I think she means she doesn't have a smartphone that can download apps.
Yeah, so absolutely. So that's a great point. Again, it doesn't have to be, you can keep a notebook in your car and you can write a paper and pencil log. That's absolutely a fine way to track it. You can do it in a notebook. You can do it in a smartphone. You can do it on your computer. Really, whatever works for you. You just need to track the log. But paper and pencil is absolutely a way to go. Yeah. Okay. Tip number 7. I'll let Priyanka share tip number 7 about packaging, shipping.
Hi everyone, I'm Priyanka. I work with Laura on marketing at Outright. And in terms of this tip number 7, which is send out your packages early, the reason we recommend this is because the different carriers for shipping are all increasing their shipping charges, and it's best to send your packages out before that hits. For each, it's different. So USPS, the United States Postal Service, is changing its rates on January 22nd, and the average increase is about 4.6%. So you would ideally want to ship anything you need to get done if you use USPS before the 22nd. The dates for UPS are actually the earliest, which is 31st December this year. So that one's got to be top priority. And the increase is similar to USPS between 4.5 and 4.9%. FedEx is changing rates January 7th, and it's the biggest hike with 5.9%. Now, if you use FBA as an Amazon seller, then the focus should be to send out your shipments to FBA as soon as possible. So don't wait, get it done, because you don't want to be paying extra on your packages. Another thing to note is that for a while, UPS shipping labels could be printed using PayPal. And some of you over here might be selling on Amazon as well as eBay, so it might be more relevant even. But in starting May of 2013, you will not be able to do that. The partnership between UPS and PayPal wouldn't be in effect after. So that's something to keep in mind, especially if your workflow focuses on this process. So yeah, that's at the end of the day, the earlier you get your packages out, whether to FBA or to your final customers, do it now, and that's our recommendation. So moving on to tip number 8. Now this one is to hire your kids and spouse. Now the reason we recommend this is because you can rack up a lot of savings as well as benefits by using this mechanism. A lot of sole proprietors know about it, but don't actually go through on this tip, simply because it seems that it must be complicated. In reality, it does have a little bit of legwork, but it's not that bad. So first, I'll go over the benefits of hiring your kids and spouses, and then a little bit of advice on how you can actually make it happen. So if you have your kids helping out with your business, simple things like labeling, filing, etc., then you can actually pay them for that. And by doing that, one, you're teaching them important skills in life, and also you're saving a lot on tax that you would have owed otherwise. So let's assume you made a profit of $6,000. If you were to just keep it with yourself, then you would be charged self-employment tax as well as income tax on that. But if you're hiring your children to work for you and give them about $6,000 as payment, then you don't have to pay the self-employment tax. And also for minors, up to $6,000, it's tax-free. So you don't have to pay any taxes on that. Of course, you'll have to set up your children as your part-time employees, and you won't have to do any Social Security or Medicaid or unemployment tax at all. Only thing would be to withhold state and income tax, but under that limit of $6,000, you don't even have to do that. So a lot of money is saved, sometimes up to $2,000. So that's the big benefit of hiring your children. Now, in terms of hiring your spouse, this focuses more on the benefits of benefits. So primarily, as a sole proprietor, in most states, if you're covering yourself with insurance, there are lesser plans. But if you're two people, which is you and your spouse, then you can join a group plan for healthcare coverage. And also, if you're earning under somewhere around $100,000, then you would not pay self-employment tax on that money, or the Medicaid tax. Now, if you hire your spouse, you also can claim HRA benefits for them, which means, but when you claim that for your spouse, you claim it, cover your spouse's family as well, which is actually you and your family. So effectively, by hiring your spouse, you end up getting HRA for your entire family. So this is a lot of savings for you, as well as just a peace of mind that you have this for your family in need of healthcare, emergency, whatever. Now, and so these are the benefits of hiring your kids and spouse. As you can see, the numbers add up, and savings can be significant. In terms of how to go about it, you will need a payroll. You will need to do payroll in order to hire, particularly your spouse. There are two ways to do it. One is to get a payroll service. We recommend either using Intuit's or a comparable one that is for, you know, 1 or 2 employees. Or you can also actually go about it yourself. The IRS Publication 15 explains how this process works, and you can look through it. If it feels simple enough, you can do it yourself. Of course, there's a peace of mind when you have a payroll service. But other than that, it would be helpful if you keep a record of the job description of your spouse as well as your children, and also make the payments out to them on a regular basis. Oftentimes, we've heard that if somebody just transfers money at the end of the year to a child or a spouse, it raises a red flag in the IRS's mind. So it's better to be consistent about it. Treat them like they're normally employees. That's different here is that you have less paperwork and more savings. Yeah, so that's basically how we recommend going about hiring your kids and spouse. It's slightly complicated, a little bit of work, but long term the savings are big.
Okay, and I have a question here from Sari. She says, I have adult children living at home. Does what you just said still apply if it's not a spouse or minor, but an adult child?
The rules when the child is over 21 are different. So you would need to do a little bit of research on that. However, since they're earning, if they're earning less than $6,000, you should still get the benefits of not having to pay self-employment tax, etc. But so yeah, just the taxation rate for the amount you give the child, or adult child in this case, would be different. So that's something to look into. And the IRS Publication 15 does have a lot of information, so I would definitely look at that.
Great.
Great. Thanks. Now back to Laura for the rest of the tips.
Okay. So tip number 9. Tip number 9 is all about learning from this year to improve next year. We oftentimes, when we talk to customers and we talk to small businesses, we often get asked, what should I be doing differently, or what can I do to save more time with my finances and make things easier? Because there's never enough time, and everyone's always looking for an easier solution. So one of the things that we talk about a lot when we think about how to improve and how to save time and how to make things easier for you in the future and the next year is spend some time looking at how your business did in 2012. So what you see here, for example, this is a report that you see in Outright that basically categorizes your spending here. So you can look and you can see how much you're spending on cost of goods sold, how much you're spending on things like advertising or office expenses, how much you're spending on travel and that kind of stuff. And when you look at that, oftentimes we hear from people, wow, I had no idea that I was spending that much on travel, or that I was spending that much on office expenses. Like, I really need to cut that down or use what I've got. So it's just little things like that that can start to provide some insight into how your business is doing and changes that you might want to make for the following year. And sort of beyond, that's kind of a small one. And then when you look even further into that and you think about who are your best customers, do you know who they are, and do you know how much they've spent with you, or do you know who your biggest vendor is that you work with? Can you go to them and ask them, you know, hey, I really value this relationship. I'm spending this amount with you. Like, it's okay to try and ask them for a discounted rate, or to let them know that you're going to continue to use them and you'd like to work something out. So once you have the insight about who your best customers are, who your biggest vendors are, those are things that can actually help you improve your business performance and potentially get discounts and that kind of stuff for the following year. It's really about understanding how your business is doing. And the last tip, number 10, there is about the fiscal cliff. So
can we do that poll right now?
Oh, absolutely. We actually have a poll about the fiscal cliff. It's sort of up to the minute topic. I don't know if anybody heard on the news last night, but there's Plan B that's now in the works for the fiscal cliff.
Everybody hopefully can see the poll in front of them right now. And the question is, how concerned are you about the fiscal cliff? And let the votes come in. A few more seconds in case anyone else wants to vote. All right, so how concerned are you about the fiscal cliff? Very concerned, 11%, somewhat, 63%, not at all, 11%, and what's the fiscal cliff, 16%.
Fiscal cliff is basically numerous tax cuts that were put into effect in the beginning of, or around 2008 during the Bush era, when the initial recession that we're possibly, people are saying we're coming out of, tax cuts were put into effect to help the economy, help small businesses, and there were many tax cuts put in to effect. Now, about 4 years later, the end of the year, those tax cuts are all scheduled to end, if you will, and so that would mean that there's a bunch of tax increases, tax limits, tax changes, many tax implications would happen if the government does not reach a new agreement by the end of the year. And so, as you've been hearing over the news, there's all this talk about the fiscal cliff and will they reach an agreement, and now there's talk of, well, if they can't reach an agreement, they're looking at Plan B. So frankly, it is a bit of a circus in terms of what will actually happen, and will they reach a new agreement, or will it move to Plan B? So it is definitely something to watch. I think at this point, the idea would be here, and there's different schools of thought on this, so I think you have to definitely talk to your accountant or do more reading up on the fiscal cliff. But the idea here is, if you bring forward a lot of, make sure that you send out all your invoices and bring forward your income, you'll be able to take advantage of those existing tax cuts that may potentially expire at, on December 31st. And if all those taxes go up, you'll obviously end up paying more on your profits. You'll be taxed at a higher rate on your profits than you would in 2012.
And then we actually, just to show you how dynamic this area is, I have a message here from one of the attendees that Plan B has just been rejected by the president.
Oh. Wow. Yeah.
And then Ellen actually has a question. Do you partner with or offer any tax help for a fee?
That's a great question. So Outright, it does not provide any tax help or guidance for a fee. What we can do is we do work with and have relationships with a number of accountants. So if you go ahead and email us, let us know what area you're in. We can certainly see and try and connect you with someone, a tax expert or accountant, who may be able to help you. Yeah, so fiscal cliff will continue to be in the news, and hopefully somebody will be able to clearly articulate what will happen by the end of the year. But it looks like it's a bit of a circus, and so we'll all continue to watch that in the news over the next week or 10 days before the end of the year. So the summary of the tips here, I won't read it to you, but you'll be able to review those. And we definitely have some time, I believe, for questions. I know we've been asking them along the way, but if there's any additional questions that folks have on what we covered, or just submit them into the question box and we'll go ahead and get them answered.
Okay, I do have a question here from Sorry. Can I pay for gas with my business credit card, or is that covered under the standard mileage deduction?
Yeah, so yeah, you have to pick you have to pick whether you use gas, maintenance, tires, all of that kind of stuff. If you deduct those individual expenses, then you can't do the standard mileage deduction. You have to choose which one of those that you do.
Okay.
And it depends, I think, from for like the amount you have as like amount of mileage, whether it will be better to claim it as an expense or a deduction. But there's a lot of literature on this online to choose one, but you have to pick.
Right.
Okay, this is an outright specific question about our application. Can you tell us about what security measures that are in place, because people are connecting their account information and having that pulled in, and I was wondering if you could tell us a little bit about the security.
Yes. So Outright actually uses the industry standard security that is used by most of the U.S. banks. So if you do online banking, Outright uses the same security procedures that the U.S. banks use. So it is absolutely industry standard security in terms of making sure that your information is safe and secure as we work, as we transport your transactions, if you will. We can follow up with you and get into some more of the technical aspects of the security if that's something that you're interested in, but we absolutely do use the same security as banks do to protect your data, which is industry standard security.
Okay, and then
and we have not had any issues. Yeah, no compromising security issues or anything like that.
Okay, and then a follow-up question also related to the Outright application is when he logs into Outright to look at his bank accounts, there's a couple of he has personal and business accounts that show up. How does Outright know to only get the information with the business accounts?
Yeah, so if you have business, if I'm understanding correctly, if you have business and personal expenses in one account, Outright will actually pull all of those expenses in, and then what you would do within Outright is you would recategorize the personal expenses that you don't want to be included in your business reports. You would recategorize that as personal in the drop-down menu, and then you would see a tab in Outright that says non-business, and those expenses would show up under non-business. So that's a great point. We do get questions oftentimes about people who are using the same accounts or same credit cards for business and personal expenses, and if you use it at some point, we do recommend that you separate your business and your personal expenses. It's just cleaner and it's an easier way to manage everything. But for the occasions that you do have some personal expenses coming through your business accounts, there is a way to pull those out so they don't show up in your business reports and your business expenses. Absolutely.
Okay, and then I actually have a comment from Anne, one of the attendees, who is providing an answer to the standard mileage deduction versus expensing your gas and all the expenses related to travel. So her comment is, usually unless you use your vehicle 100% of the time, it is more beneficial to take the standard mileage deduction.
Yeah.
So thank you, Patricia, for providing that. And then
as an addendum to that, just wanted to add that the standard mileage deduction is better just because you don't have to carry around 100 receipts of when you paid gas or what you did, which would be the case if it was a business expense that you were calculating. So ease is also bigger in these. But there are times when you actually cannot use the standard mileage, And there's a lot of reasons why you can, but one big one to keep note of is that if you claimed Section 179 deduction on your car, then you cannot do the standard mileage deduction rate.
And if you remember, Section 179 was what we were just talking about earlier, which is the Internal Revenue Code that allows you to take the full expense of capital assets like equipment, furniture, software, cars. You can write the full expense of that off in 2012. And so you can see there, that's the point. If you're writing that full expense off, you're then not able to sort of double dip and get a mileage deduction too. So the IRS has thought of every loophole to keep you from double dipping and getting multiple deductions on different things.
Okay, great. And then there is a question about tip number 3, spending more. Anne asks, does that include inventory purchases?
Does it include inventory purchases? So if you purchased additional inventory, it doesn't necessarily include inventory purchases, meaning if you purchased additional inventory at the end of the year, you would have to, that would be part of your inventory count that you would then not be able to deduct until you actually sold that. Right, so any of your inventory, if you purchase it now, it will go into your inventory bucket, but you won't actually be able to deduct any of it until you actually sell it, in which case some of that goes into cost of goods sold. That's a good question, yeah.
Okay, this is a question about tax ID number. Is the tax ID number for business the same thing as the state sales tax license number?
Ooh. I don't think so, but let's see what we can, I'm not sure. We'll get back to you on that one. We're not sure about that. I don't think so, because in everything that we have learned about tax ID numbers, we don't see it associated with anything quite like the Social Security number. You often hear they're sort of interchangeable, if you will. We don't hear anything else about about sales tax ID. So
it's definitely different. I just checked that. It's a completely different one, and it's aimed specifically at people actually who are selling goods. While a tax ID number is even if you were, let's say, a sole practicing a web developer contractor. So if you're selling a service, even so you could get a tax ID number, while the state sales tax is for if you're selling goods, online or offline.
yeah, that makes sense.
Okay, then here is a question specific to Amazon sales. So on Amazon, all sales are recorded, and then the payment is also recorded when it goes into the bank account. Is this a duplication? Will it be, is that, a double counting within outright? If you have both your sales from Amazon being pulled from Amazon, and then the deposit as it goes into your bank account.
No, outright will not double count that.
Okay, great.
Right.
Okay.
Looks like my screen just shifted. Okay. Lots of questions.
This is great.
Okay, and then so the question is, should you be trying to sell the majority of your inventory by, and I'm guessing here, and should you be trying to sell the majority of your inventory, but I'm guessing that to mean by the end of 2012.
Yeah, that would make sense. So I think it depends, actually. So it depends if you are, I guess it's a little bit complicated, right? So you're going to be taxed on your profits. So if you look at where your profits are right now, where your profit is right now, so that's everything that you've sold minus everything that you've spent. If you look at that profit number and it's higher than you want it to be, it means that's good, your business is doing good, but that might mean you're going to be taxed at a higher rate than you may have thought. So you would probably want to include find more deductions to bring that profit number down. In that case, you wouldn't want to sell all of your inventory, but you may find portions of your inventory that you would perhaps want to donate to charity, so then you can take that charitable donation as a tax deduction. I think the main thing with inventory, depending on what you're trying to accomplish, is inventory that sits around for a long time and you don't move is not necessarily helping your business. So it's, you're paying storage fees for it, and you're not making any money from it. So the idea would be to move that inventory, donate it to charity, make sure that your inventory is always moving. Now, for your specific tax situation, what you're trying to do for the end of the year, if you're trying to reduce the amount you'll be, your profits, then don't move additional inventory and donate, so it will be a deduction. But it really depends what you're trying to do.
Okay, and then a question specifically to Outright, that if, this is from Rod, if he has his bank account linked to Outright, how far back can Outright go to get data?
Yeah, so that's a great question. We do get that question a lot from folks who are just starting up. So most banks and credit cards, when you link your Outright account, banks and credit cards most provide the last 90 days worth of data, which they will actually import into Outright. Outright will take as much data as they'll give us, but the banks provide generally 90 days, and I think that's probably just their sort of benchmark in terms of what they provide easy access to. Now, you are able to go to your bank and get additional months of data. You just have to contact them and have them make it accessible to you, which oftentimes people do. They will make it accessible to you in an Excel type file, which then you can import into Outright so that you would have as much data as you want in there. Right.
Okay. Are there any other questions out there? If you, please type them into the questions window if you have them. Okay, so it looks like the questions have ended, and actually what I'd like to do now is select the winners of a surprise gift. So since it's the 19th, I'm pulling the first person that asked the question and the 9th person who asked a question, and we will give you a lovely Outright t-shirt. So I will email the two of you. It's Rod and Patricia, and I will email the two of you to find out what size you'd like and what color. We have the choice of 2.
Great. And this is Laura. If there's any additional questions that you think of, you have questions about Outright or any additional questions that you think of, our email addresses are here on the screen, laurayu@outright.com and priyanka@outright.com. Feel free to go ahead and email us and we'll get back to you. And enjoy.